market analysts expect yields in the Treasury bills secondary market to expand as liquidity in the financial system becomes pressured during this week. Buy interest is observed on the 2029, 2032, 2042, and 2049 papers. Tunde Adama, head of trading at CitiBank Nigeria, joins me now for some market insight. Tunde, thank you so much for joining us today. Before we go into Treasury's local fixed income market, I wanted to just get your thoughts on Nigeria's dollar bonds and the rally that we've seen, especially on Monday. I mean, opinion is mixed among market watchers as to what is a key driver, etc. But many of it is still tied to the pronouncements from the new administration, the removal of subsidy, the promise of an imminent, floating or unification of the naira to dollar exchange rate, etc. But what are your thoughts in terms of what is actually driving this? Is this just a signal that the market is taking and then working on?
I think the market has been impressed with the timelines and the reforms that have taken place in these first few weeks of this administration. I think most people had reforms happening. I mean, subsidy, for example, most people thought earliest it would happen would be June 30th. The FX situation, everybody thought it's something that will happen months down the line. But, subsidy was removed immediately, which is making our fiscal position a lot better. I mean, they projected about 3-point-something trillion as part of the budget for this year. So over a full year, it means something like about over 7 trillion in savings, really, versus having the subsidy on, and of course the continued pronouncement about the fact that they were working on unification. So market has seen all those things as positive. So market is pricing in the fact that they will succeed with these reforms and that will get more pro-market, pro-business changes to the policy space. So
I think that's the key. I mean, pro-market policies, because previously I think we had more of the socialists and but for just that last point, because a senior member of the president's cabinet has been, well, not cabinet, but party as it were, has been quoted as saying that as far as the unification of the naira exchange rates window is concerned, it could be a matter of in a quarter rather than months. I mean, that's a strong statement. I just wanted to get your thoughts on that.
Again, it's very consistent. Before inauguration, the president had mentioned unification. The vice president said it the weekend before inauguration. On inauguration day, and seeing one of the more senior advisors on economy and finance saying it again, is a consistent message that this is priority. This is something that we're working on. And this is something that we expect to happen sooner rather than later. Even though he said the end of the quarter, I think market is pricing in the fact that it probably happens earlier than that, based on how swift most of the reforms.
Because what we've been made to believe was, perhaps a phased over in the next couple of months is more feasible, to get, give the markets time to adjust, etc. But would you say that the market is already ready, overdue, and just,
I think market thinks,
waiting for,
even if it's going to be phased, I think the market thinks it's going to happen a lot quicker. Again, market it's very positive. I think it's very positive for Nigeria in general. But market believes that these reforms will happen. They will happen quickly, and that they are going to go the whole 9 yards to ensure that they push it all the way possible. So he said quarters, but I think market thinks it happens earlier.
Well, can I put you on the spot by asking for a range? I've been asking, my analysts off camera for a range. I mean, what is out there is, we're hearing 630, 650, and we hear that subsequently the black market, parallel market could sort of dry up after that. But what are your thoughts? Final point in this?
For me, I think it's always, for me, it's more what happens rather than a devaluation. How do you liberalize? How do you attract more inflows into the market? And how do you make liquidity more available? Because if you just devalue without making a lot of these changes, you just moved current market conditions to a higher level. So I'm more interested in the other reforms around it rather than an outright number for where they move the narrative.
Okay, let's talk about the domestic bond market. What is the outlook? What are you seeing in terms of key drivers? We know that this government, I mean, domestically, there will be more borrowing. There's going to be a lot of spending from the signals we've received, so there's going to be a lot of borrowing. But talk to us about what we can expect going forward.
I think the market is sort of trading cautiously now because there are two things you mentioned. There's the fact that borrowing is going to continue, which you would expect should mean interest rates stay a bit elevated. Inflation is at 22%. With the removal of fuel subsidy, you expect that inflation remains elevated for a while, and we have these negative returns on real rates. But I know the administration is keen. The president said it to have lower interest rates. Of course, they haven't given timelines. Is this short term? Is this medium term? Is this long term? And so market is waiting to see how they balance the need to have interest rates staying really high, even for FX as well, plus their desire to have it lower. And if there's any sort of guidance or plan about this is a medium-term plan and all. So for now, market is trading cautiously.
But even for inflation, because, you know, the opinion is also mixed. Do we want higher, or can we go for higher inflation, but then have growth at the same time? Or do we remain, I won't say paranoid, because inflation is a real threat for all countries across the world. Do we focus on bringing down inflation in the short to medium term and then sacrifice growth in the process? What way do you think?
Again, even the president touched on the fact that whatever he's doing, he's also going to try and sort of keep inflation stable. I think there's a reason why most countries in the world have inflation targeting as like a central core of what they're doing. Because even if you don't target inflation and you start to push on growth numbers, that inflation going haywire would affect that along the line as well. So I personally think inflation is right there in front of you. It's something that you have to curb. Removal of subsidy is a part of the challenge that people are going to be asking for increased wages and all. So I think in the short term, I would think that the main target would be inflation. They'll still be working on reforms that would help lead to larger economy and commerce and all that. And as inflation starts to be handled, maybe there'll be a more aggressive switch to growth. But inflation is right there in front of you, and it's something you have to deal with.
Okay. Did I ask you outlook for the rest of the week? Treasuries, market, what are market liquidity conditions right now?
The market is quite liquid. We have a T-bill auction tomorrow, so that will be in there. I think market will trade cautiously for the rest of the week, barring any new reforms or any new policy from the central bank.
Pronouncements.
I think it will be.
All right, Tunde, thank you so much for your time today. Tunde Adama, Head of Trading at CitiBank Nigeria.